Qualifying for a mortgage when you receive alimony or child support as income can be kind of tricky. So, what I'm doing is I'm breaking down the guidelines for every single agency or every single potential place that you could get a mortgage loan. We've covered Fannie Mae and Freddie Mac; those are both conventional loan programs. Today, we're going to go through the FHA government uh, alimony and child support income guidelines. So, what I recommend is unless you're a veteran and you qualify for a VA loan, or unless you're buying in an area that's USDA eligible, your Fannie, Freddie, and FHA are going to be your primary loan programs that are available to anybody. You don't have to have special circumstances to qualify for any of these loans. You just have to meet the qualifying criteria for each one of these loans. So, after watching this, if it doesn't seem like you qualify, check Fannie Mae, check the Freddie Mac. But quite honestly, FHA is probably going to be a lot more lenient than Fannie Mae or Freddie Mac. So let's go ahead and get right into this. Let me make this a little bit bigger so that you can see it. So, really, what we're talking about when you're talking about child support and you're talking about alimony, because they're not tied to an employer, there's a few things that the underwriter is going to look at. They're going to look at a continuation of receipt, so they're going to make sure that you're going to be receiving this for a certain period of time. They want to verify that you've been receiving it in the past, so you have a history of receiving it. And then we're going to talk about how you calculate that income and what we can do with that income, and actually how that's going to help you qualify for your mortgage. So, the first thing you need to do is you need to document the payment amount. Now, there's a few ways you can do this, but you 100% have to document it. Some of the ways is you can obtain a divorce decree, any sort of a legal separation agreement, a court order, or even a voluntary payment agreement with documented receipt. So it doesn't even have to be an official court order if it's written down. As long as it's documented, we can use that to start with. Uh, Now, what we need to show is that there's going to be 3 years of continuation. So, most alimony and child support is based on a timeline. Uh, Many times you'll see that it's based on the age of the children. For both the alimony and the child support. So you have to show that it's going to continue for 3 years. The underwriter is going to ask for the front page or the pertinent pages from the divorce decree, settlement agreement, or the court order showing the payment and the terms. Now, here's where you can handwrite an agreement, but you probably want to get it notarized or you want to get it court approved. The documentation is important here. So if it comes from the court and it states the terms and the details of the support. This is how much support you're going to receive for this long, and until this event happens, and it could be until you get married or something like that. Now, that's not going to prevent an underwriter from allowing you to use it if there's a clause in there that says if you get into a new relationship, the alimony is no longer there. That nobody can tell the future, so they're not going to judge you for that. But if you have child support and you have a child that is 17 years old and child support only lasts until they're 18, then you cannot use that income. You can't use that child support to qualify because it will not continue. There is not a likelihood of it continuing for 3 years. The history of the receipt. So not only do you have to prove that you're going to get that money moving forward into the future, you also have to prove that you didn't just make all of this up. You've been receiving this income. Now you have to show a history of receipt. So the history of receipt, you can use either bank statements or deposits. You can use canceled checks. or you can use documentation from the child support agency for the recent 3 months. So you need to show 3 months worth of receiving that income. I want to say Fannie Mae and Freddie Mac are maybe 6 months. So that would be a good scenario where if you don't have enough payment history of receipt to use a Fannie Mae or a Freddie Mac loan, you could still probably buy with an FHA loan, because if you only have 3 months or 3 months between 3 and 6 months of receiving the child support. History of receipt. If the payments are made by a voluntary agreement, then you have to show 12 months of canceled checks, deposit slips, or tax returns. And only 6 months. Only 6 months is considered is still considered stable. So if you're not going through the court, if the payments are voluntarily made, then you're going to have to show between 6 and 12 months of canceled checks in order to show that you have a history of receiving it. If you received it for 2 months and then you didn't receive it for 2 months and then you got another payment and then you didn't receive it for a month, that's going to be a challenge. And that's one of the reasons why going the court ordered route is always the best way to protect you, to protect yourself, and to get the proper documentation so that if you find yourself in this situation, you have the documentation that you need in order to qualify. Now, if the alimony or child support has not been consistently received for the most recent 6 months, the underwriter may use a 24-month average, or for as long as it's received. So it's possible, again, that the underwriter can go in there and take the money that you've received. So if you can show in the last 24 months they missed 2 or 3 payments, that might be enough for the underwriter to use underwriter's discretion to go in there and say, okay, we can show that this is consistent enough that we can use this as a history of receipt. And this is a little bit different. There's a lot more flexibility here than there is with Fannie Mae and Freddie Mac. So again, if you're watching this video, then this is probably the most lenient and the easiest type of program to get qualified for. Fannie Mae and Freddie Mac is going to be a little bit more difficult. So now that you've established that you're going to receive that income for 3 years, you establish that you have received that income for a minimum of 3 months from court ordered, or you've documented that you've received it enough so that you can use it. How do you calculate the income? Now, if you're the recipient of alimony and child support, most of that is non-taxable. It is taxed on the side of the person that's paying the alimony or child support. So you'll want to check with your CPA and determine the taxable status of your eligible support payments. Normally, alimony and child support is not taxed by the recipient, and if that's the case, it can be grossed up by 25%. So really what we're doing is we're taking the total dollar amount times 125%, and that's what you can use. So it's actually 25% more, because what they're doing is they're taking into account the fact that you're not going to have to pay taxes. So 100% of that support you can use to qualify. Now, there are moving parts on this. The documentation isn't always perfect, and it's complex. The underwriting guidelines for calculating child support and alimony are different if you're using an FHA government loan than if you're using a Fannie Mae conventional loan or if you're using a Freddie Mac conventional loan. They're all different. So it's so important that you work with an experienced mortgage professional. An experienced mortgage professional doesn't know all of these guidelines off the top of their head, but they're going to go in there and they're going to look it up, and they're going to look up the Fannie guidelines and the Freddie guidelines and the FHA guidelines, and they're going to present you with all of your options so that you can make an informed decision about what is best for you. Now, if you do not already have a loan officer that you know, like, and trust, you can find one at findmywayhome.com. Findmywayhome.com is a network of mortgage professionals that well, let's just say it as it is. We're guideline geeks. We don't like to say no. We will fight tooth and nail to make this happen. What we like to say is we don't say no, we say not now. So if there's an opportunity, we're just going to tell you what your situation is and where to go in the future. So if you go to findmywayhome.com, there's a space on there that you can tell me what your biggest question or concern is about qualifying for a mortgage, or you can go to the state directory and you can choose somebody who's licensed in your state, and you can go through and watch their videos, read their articles, and determine for yourself whether they're a good match for you. So if you are watching this video and you have any questions, feel free to ask any questions below. I answer all of the questions. Any question that anybody asks, we can get you pointed in the right direction, or you can go to Find My Way Home and you can find more answers there. So I hope this was helpful. And if you're in this situation, I know it can be a potentially challenging situation, and there's a lot on the line here. So hopefully I was able to help you identify an opportunity for you to purchase a home using your alimony and child support payments. That's it for this time, and we'll see you on the next video.